Hi guys, welcome to this week's video. We'll go over some charts and look at the market, what's happening. I'll go over how the CPI came and what I'm looking for next week. I hope you guys are enjoying these videos. If you are, please don't forget to like and subscribe. And let's look at some of the things, what's coming up for next week. All right, so let's look at what happened. We don't really have much coming up this coming week. We do have a few things, the jobless claims and I think the home building permits. So those are the two things that are coming for this week. However, last week is what came, right? The CPI month over month, year over year, and core numbers were hotter than expected. And, the food and energy year over year, everything was hotter than that was expected. So that means, feds are not done. Feds have a lot of work to do to bring this inflation down. So that's a big problem for Feds. So they definitely need to get this down right now. So right now, a few days ago, actually, the major Fed fund futures were at about 4.67%. And right now, they're pricing it in at about 4.96%, which is a lot. So I don't think so market is done yet from pulling back or us having seen the bottom. So there is a lot of work for Feds still need to do. So if we look at the 2-year bonds right here, you can see we have a bull flag within the bull flag, and every time it's breaking out, we've been running. So as you know, anytime your 2-year or 10-year is running, not a good for the equity market, meaning for your stocks, it's going to probably pull back. So the people are taking money out of the stock market, they're going more into the safe zones. So as you can see, this is what I'm looking for at 4.65%, which is, I think, totally doable, because if you look at the, Fed fund futures for December 2023, they're already trading at 4.65%. So looks like the 2-year is definitely headed toward that. And then I do want to go over other things that I like to look at it. So let's look at TLT. I'm going to go out to the daily chart right here. And as you can see, these are the 20-year Treasury bonds. And this was a bear flag. This bear flag gave us that run on the SPX. So anytime a TLT is moving higher, our market will move higher. As this is pulling down, definitely the market's going to pull down. So it still has, these are my kind of a measure moves that are what I'm looking at. It is about $92 to 77 is somewhere. So if we are going to see, we'll probably see, I would say, a little bit more down toward, and then create a small, that flag, and then pull back. So that's what I'm thinking is probably going to happen, but again, the time will tell. So that's what we have on the TLT. And now you can also look at, these are the two things that will be the opposite of it, TNX. So this is your 10-year Treasury notes yield. And this has been a bull flag, right? So now if we are to get that bear flag created on TLT and have a bull flag created on TNX for it to run a little bit further, which I have at about 5.34% going up to it, that means we might get that, still has a room to pull down, and then have that pull back up to on the market where indicators can be reset. So always watch what the TLT and TNX is doing. So looking at the TNX on the daily, we could start to make that flag, still has a room. It could continue to go up and keep making the pull and then make the flag. Same thing with the TLT. We could continue to make that downward flag, pull, and then make that flag. So these things do go with each other. So I'm always watching this, what's happening in that. And then the next is our dollar. dollar's been insanely, strong, and I don't think so it is done. So any pullbacks on this trend line, we've been able to capture, and these, support and resistance levels have played out pretty well too. So if we do see a pullback and the market is, the stocks are pulling up, these are the levels that you want to watch on the dollar. What's it's happening. So I was even looking at the longer time frames. If we look at the 3 months, this is actually beautifully broke out of this neckline, and it's been strong. So any pullbacks would probably kind of head with a more fuel to the upside of it. So this 121, 126, and 133 is totally doable on the dollar before we start to see any pullbacks happening. Market finding any bottoms. But note this, how beautiful this neckline was broken above. And if you were to do a measure move, these are the levels that you are going to get. And this is the 3 month. Okay. All right. So now let's look at some of the fun stuff on SPY. So this is our daily chart, and pretty much the same levels have been playing out throughout the week. But one thing I wanted to show you guys was, this is a SPY chart out of the October 2008. So if we look at it, October 13, 2008 candle, look at this. I shared it in the group, and the day it was being, formed, we have a literally identical candle happening on October 13 and 08. And this happened on, October 13, 2022. And literally the next day on October 14th, you open up higher, you literally end up giving it the gains. And we did a pretty much the similar setup that happened on it. So there is, if you look back on history, it's been kind of repeating it, or it acts like the similarity. So do we gap down on Monday and then start to have this pull up? And then, think about it. These things are also giving you the chance on the TLT and TNX to form those the flags, the bull ones and the bear ones. So this kind of lines up with all of those things if we were to see the same thing. However, if we were to see some bounces on it, this still has a couple of these key levels. The 350, the 352 needs to be broken out to the upside for SPY to continue to run. So let's look at SPX as well. And I'm this channel on SPX has been respected pretty nicely. So any of these small blue lines are the gaps on SPX. So this gap is totally fillable. We're not far from it. And then you got another gap at the bottom. And then if you start to look, we have these going back to, these gaps pretty far away. And this is the April 20, and then you have one in May that occurred, and this gets ugly. And if you now again go back to think about your TNX and TLT and looking at the future funds where they are trading, these levels are not far away from it to be getting filled. So we're going to see more and more volatility in the market. I don't think so it is done or we've found any bottom. It's been pretty challenging that, when you have a 100-point run up and then you end up giving that 150 points back the next day, it is pretty risky what the volatility is looking like. So making sure your risk management is on point, that you are playing with stop losses, trailing stops, that you're not going in blindly, that you're not playing with the shorter dated expirations is gonna be what it's gonna save you. And I also wanted to look at quickly the 2-hour chart on SPX. I did create a little kind of like the path I think we could take. So if we do have that Friday pullback and then we move higher, this is the path we potentially could take. or if it continues, this is the path that we are looking. We'll probably fill one of the gap and then move and then continue to pull back. So I would say there is going to be March 13, March 14 of 2023. Mark those dates. We'll see some sort of action, or by that time we have reached at some point somewhere. But when I was charting and looking at, some of the moves, measure moves, or what the time was coming, it was ridiculous that a lot of the things were coming up to the, March 13, March 14th area. So definitely keep that date on mind. As I had said before, October 13, October 14th, we'll see some things, or up to even October 25th. So remember these dates and pay attention to those and see what's happening. So I do wanted to add a new chart to our list, and which is ENPH. And this one I was kind of surprised and not very have scalped or day traded. The contract moved beautifully as I was trading on this one. Like when I'm doing scalping and day trading, I'm only doing the weeklies, but the contract moved beautiful. So we have a daily demand that's coming up on ENPH. So if the market pulls back, and this is where it pulls back, this area in the 220, 217 area, and then it bounces, this is what I'm looking for. So I do have a couple alerts set up on ENPH, and looking for this, pull back into this area and fill this gap, and then continue to move higher. So definitely put this one on your radar and keep an eye on it. Since we are looking at those, so let's look at Oxy. This is a trade that we took last week. Some of you have asked for me to break down what I've taken. So if you go back to the video that I went over last week, and this was the area that I was looking for it to come down, as this was my demand, and it had a gap to fill. So once we kind of had a double bottom the next day, this is where I made an entry for a swing. Not for a shorter date, it was a swing. And then the next day, we were up almost 60% on those contracts. So this is how I took that trade. I waited for it. It did exactly what we thought it was going to do. If you look at it Monday, we tested that, the fair value gap. We ended up rejecting. And you could have written, it's again your plan, what you want to, what are you looking? My plan was I wanted to wait for the pullback and take a call. I did not want to get into a put. Just because oil's been pretty strong. So once it rejected, came down, and we had a perfect bounce out of this demand and the gap area. Of course, I would have loved it for it to fill, but it didn't. And however, this was confirmation. I did not enter on this day. I entered the next day when we had a confirmed double bottom. And then the following day, I was able to benefit from it. And it was, as you can see, look at that volume. We had a beautiful, almost, $4 or $5 move from here, and it's still following my path. And what I'm going to be looking for it to see how we react here again, or how rest of the market is also doing as well. So this is still in play, still using the same levels, still watching to see what it's going to do. So definitely something that you can keep it on your radar as well. All right, the next one is Dollar Tree. I play this one pretty much literally every week. Anytime I see these ones come into this level, I'm taking a trade. And this is my stop loss. So stop loss from below the trend line, and stop loss just because I don't want them to kick me out if they are stop loss, if they're hunting for stop losses. As you can see, it's every time it's pulled back into this zone right here, and it pulls back up. So putting your stop loss here, risk to reward is beautiful on this one as well. However, if we start to break below these levels right here, it has a beautiful gap to fill on the downside. Right now, I've been only playing calls on Dollar Tree. I have not taken a put. I will only take a put if it breaks below from this zone right here between 134 to 132 level. If it starts breaking, I'm definitely taking a put with the time, and I'm looking for it to fill this gap. So that's what I'm looking on the Dollar Tree. All right, let's look at Costco. That was another one that we look at quite often. Okay, so far it is following the path. I would love for it to break below the 451, 452. I'm not going to be jumping into puts because I want it to, my plan is to take a call. If it comes into the daily demand zone right here, the 438, 439 area, I'm looking for a call for it to retest at least 50% of the fib levels. So I am still watching Costco right here. So I'm going to be looking for exactly the same, lines still play. As you can see, we rejected beautifully on this supply zone, and we are coming down. Would love for it to pull back into the demand and then bounce. So I will be looking for calls on Costco. All right, let's look at Apple. Okay, we are respecting this, the downward kind of channel right here on Apple, and we breaking below this demand that we had. And right now, my next target would be to watch the 132 level, how we react to it, and I'm gonna extend this trend line as well and see how it end up playing. These are some of the levels that I'm watching once the whole market pulls back and the dust settles down. The other interesting thing is, especially now the market that we are in, you want to start looking at some different time frames. Don't just stick with your daily, weekly, monthly. This is your 3-month chart on Apple. Look at that candle on Apple that is forming. I'm just gonna not show this trend line right here. Okay, so look at that candle that is forming, and we still have time left on it, but look at the spot that it's sitting. You can bet if we break this 132 level, you got 119, 110 in the making for it. So start paying attention to some of these, longer time frames and see how it's working out. And weekly is also coming down. We are, just literally $1 something away from this level. We break this with the time on your contracts, this would pay very nicely on Apple. All right. And our team's favorite, let's look at Netflix. This has been, I haven't really updated or added in new lines because it's been respecting this zone beautifully. Now, this demand has been used multiple times. I wouldn't be using this for a bounce to break above or anything. I would just be watching to see how it reacts when it breaks below. That's what I would be watching on Netflix. And as you can see, these 3 zones have been pretty amazing that it's having hard time breaking above 235, and it's having hard time breaking above the 242, 249 area. So any of these rejects, you can say that it's coming down, pulling back to at least this zone of the 220 and 224 zone. So I would definitely be continue to watch. And anytime it loses below this 211, 215, and it holds the next candle as a confirmation, you can take a put. And we still have these levels to the downside on Netflix. And then on the upside, it still have that beautiful gap to fill. And so something to watch as well. Okay, let's look at Starbucks. Same thing. Starbucks is, I still think this is a bear flag. We're still building it. And anytime it loses this below, we are headed toward this 78, 77 area. As you can see, it did fake you out for a bit and then pulled back in. So those are the things that you want to keep in mind when you are taking your swings. If it is pulling back, how much is it pulling back? How is the candle looking? What is the other time frames telling you? If it is looking bearish, take a put. You got a beautiful zone right here that it could come back and test. However, we literally just been trading within these about $4 to $6. Reject on $90 or $92, a beautiful puts are paying off. Anytime bounce from 84, 82, calls are paying off as well with the, obviously reasonable stop loss that you don't want to get caught in calls, especially in this market. So keep these levels in your mind, or put it on your charts. Okay. What should we do? Okay, let's look at Walmart as well. That one was on our list last week. Okay, and as you can see, this 135.20 is based on the dark blueprints, and that level could not be broken. And so that tells you that's your resistance. Anytime Walmart is in this area and it's not breaking, a beautiful puts are playing off up to 128. And you can see how strong this support is. Every time it comes here, it's breaking above. So let's say you open up a chart and Walmart that day is somewhere in 128 or 127.80. I would not take a put, just because if you look at this is basically stop loss hunting because it's right below the support. So I would wait for it to at least candle close below and then take a put. Then you got a room down to 122, and then you have a beautiful demand in the 100 areas. And if the way the market is, the things that are going to be happening, I'm pretty sure we'll test these demand zones at some point. And I'm really hoping it's going to be before that March 13th, 14th of 2023. But it also has a beautiful gap to fill on the upside. And if you are seeing your TLT moving up, TNX coming down, dollar coming down, and VIX coming down, you're breaking above 135 area, then you jump into it. So anytime I'm jumping into a swing, I'm looking at all of those things. I don't just go by, the Walmart chart is telling me that, let me jump in. No, I'm gonna go and look at all the other indicators. What are they telling me? If those are also lining up with what I'm seeing on Walmart, that's when I will jump into it. So always keep those things in mind. What else? Let's see. What do we want to look at? Let's look at NVIDIA. Okay, that's the last one. I don't want to make the video too long. And again, we are out of the demand zone on this one. You got the next one is somewhere in the $92, $94. And I'm going to pull this down a little bit, and we are holding. Any bounce on these trend lines has bounced back up. So definitely watch this. Every reject on NVIDIA in the 123, 131 area has been a beautiful put as well. So if we are going to break out, I want to see the breakout above 131, 132 to go even long on my calls. And that's what I would be watching on it. I hope this helps you guys, and you guys are enjoying these weekly videos and are able to use these levels. If you have any questions, please put it below in the comment, and I will do my best to reply to everyone. And please don't forget to like and subscribe. Thank you. I will see you next week.